Welcome to the deep dive. Let's get straight to it. You're looking at Bitcoin, maybe thinking about jumping in, but you see the price. What is it today? May 9th, 2025, around $103,000 USD. And you're probably thinking, wow, have I just completely missed the boat?
That's the big question on a lot of people's minds, isn't it? Seeing that number, especially compared to, a few years ago,
Hmm.
it feels high. It's natural to feel like you're late.
It really is. But what's interesting is when we look at our sources, we're talking expert forecasts, seeing big financial players getting more interested, even whole countries adopting it.
Right.
It kind of suggests the story isn't over. I mean, that Cointelegraph X post throwing out $200,000 by Q4 this year.
Yeah, or ARK Invest, looking further out, projecting something like $710,000 by 2030.
Exactly. So those kinds of numbers make you think, well, maybe there's still potential, even starting now.
Absolutely. Look, the folks who got in really early, sure, they saw incredible gains from much lower prices, no doubt. But does that mean the opportunity for, meaningful returns is gone today? Not necessarily. It just means you need to be, well, smarter about it, more strategic.
Okay. So that's our mission for this deep dive then. We want to give you, listening right now, some solid practical strategies, things that are actually beginner friendly, ways to approach Bitcoin investment today, even with that feeling of being a latecomer.
Mhm.
So, where do we start? What's the first big strategy?
I think the absolute foundation, the one you hear about constantly, is just buying Bitcoin and holding it for the
Uh,
long haul. The crypto community calls it HODL.
ODL, right. Heard that one. So buy it and then just sit tight. Ignore the crazy daily swings, the news headlines, the Twitter noise, and just focus years down the line.
That's the core idea, precisely. You mentioned that Cointelegraph X post. They specifically suggested buying at least, what was it, zero point 0.1 BTC and holding for 10 years.
10 years. Wow. Okay.
It really underscores that long-term mindset.
Hmm.
And the logic behind it is pretty straightforward, fundamentally. Bitcoin has this fixed supply. Only 21 million coins will ever exist, period.
Mm-hmm.
And as demand potentially keeps growing, big institutions wanting a piece, more use in emerging markets, things like that, basic supply and demand says that limited supply should theoretically push the price up over time. Plus, you had the halving event back in 2024, which cut the rate of new coin creation. That just adds to the scarcity feel.
So it's like digital scarcity, like gold, but with a pre-programmed supply cap. Okay, that makes sense. But practically speaking, how does someone actually do that? If you're totally new, what are the first steps?
First step is picking a place to buy it. You
Mhm.
need a reliable exchange. Names that come up a lot are like Coinbase or Binance. They're pretty established. Then, once you've bought it, the really crucial part for long-term holding is security. How do you keep it safe?
Right, because you hear horror stories.
Exactly. So the strong recommendation is usually a hardware wallet. Think Ledger or Trezor. Those are common examples.
Hmm.
These are little physical devices that keep your private keys, basically your password to your Bitcoin, completely offline. It
Yeah.
massively reduces the risk of getting hacked online. You're essentially your own bank, so security is just paramount.
Okay, so like a mini Fort Knox for your Bitcoin. Got it.
Hmm.
But what about those price swings? Bitcoin's famous for being volatile, going up and down like crazy. That must be tough for HO dealing. Is there a strategy for that? That's where dollar cost averaging comes in, I guess.
Yes, exactly. That volatility is precisely why dollar cost averaging, or DCA, is such a popular strategy, especially for newcomers. The idea is really simple. Instead of trying to time the market and dump a lump sum in at the perfect moment, which is almost impossible,
Right. Good luck with that.
you invest a fixed amount of money regularly, like, say, every week or every month. We saw examples like maybe 10,000 yen a month or 500 USD a week, something consistent.
So you're not trying to be a genius trader, just consistently buying small amounts over time, no matter the price.
Precisely. Like Easy Crypto's guide mentioned this. It really lowers the risk of buying your whole stash right before a price drop. Over time, it averages out your purchase price. Some weeks you buy more Bitcoin when the price is low. Other weeks you buy less when it's high. The X post we saw also highlighted it as a great way for beginners to get started without taking on massive risk all at once. It smooths things out.
And is that hard to set up, the DCA thing?
Actually, no, it's usually quite easy. Most of the big exchanges, the Coinbases and Binances, they offer features to automate it. You could often just link your bank account, set a schedule like buy $50 every Friday, and it just happens. Takes the emotion out of it. Make sure you stick to the plan.
Okay, that sounds pretty manageable. All right, so we have HO dealing for the long game, DCA for smoothing out the ride. What if someone's still a bit nervous about, handling the Bitcoin directly, the wallets, the keys? It can seem intimidating. Is there another way in?
There is, and that brings us to spot Bitcoin ETFs, exchange traded funds.
ETFs. Okay, I know this from regular stock investing.
Exactly. These are funds that trade on normal stock exchanges like the NYSE or NASDAQ, but their whole purpose is to track the price of Bitcoin. The fund itself holds the actual Bitcoin.
Ah, so you don't hold the Bitcoin, you hold shares in the fund that holds the Bitcoin.
Precisely. And that's a big deal for newcomers. As Investopedia noted, you skip the whole learning curve of crypto wallets, private key security, all that stuff. The fund manager handles the custody and security of the actual Bitcoin. You see ETFs like the iShares Bitcoin Trust, ticker IBEAT, that have become really popular options.
Yeah, it definitely sounds more familiar, probably less intimidating for someone already investing in stocks or regular ETFs. How do you actually buy them then?
It's usually straightforward. If you have a standard brokerage account, think Fidelity, Charles Schwab, places like that, you can typically just search for the Bitcoin ETF ticker, like IBIT, and buy shares just like you'd buy shares of Apple or any other ETF. One thing to check, though, is the fees. Different ETFs have different expense ratios, so look into that. And again, just like with direct Bitcoin, the idea here is generally long-term holding, not quick trades.
Makes sense. Keep an eye on the costs. Hold for the long term.
Okay, so HODL DCA ETFs, those seem like solid starting points. But investing always involves risk, right? Especially with something like Bitcoin. How should people think about managing that risk?
Oh, absolutely critical. Risk management is non negotiable here. Rule number one, only invest what you can genuinely afford to lose. Don't put your rent money in Bitcoin. A common rule of thumb you hear is maybe allocating, say, 1% to 5% of your total investment portfolio to Bitcoin. Keep it measured.
Right, don't bet the farm. Exactly. And it's also really important to stay informed, keep tabs on market trends, but also what's happening with regulations. That Morningstar article we looked at really stressed how much regulation and moves by big institutions could shape the market in 2025.
So it's not just set it and forget it. You need to pay some
A
attention.
little bit, yeah. Following a reputable news sources CoinDesk, Cointelegraph are good ones,
Hmm?
maybe some knowledgeable accounts on X. It helps you understand the context. And crucially, as another ex-post advised, try really hard not to make emotional decisions. Don't panic sell just because you see scary headlines or market dips. That's often called FUD, fear, uncertainty, and doubt.
Ah, FUD. Yeah, avoid the FUD. Stick to the plan.
Okay.
Good advice. Now, our sources also kind of hinted at a few more advanced things. Should we maybe quickly mention those?
Yeah, worth a brief mention just for awareness. Market timing, trying to perfectly buy the dips.
The Holy Grail.
Uh-huh. Yeah. It looks great on paper, but honestly, it requires a lot of technical skill and analysis that most beginners just don't have. Generally, as the sources suggest, sticking with DCA is much more practical for most people. Then there's lending. Platforms like BlockFi or Nexo let you lend out your Bitcoin to earn interest.
Oh, interesting.
It is, but it comes with what's called counterparty risk, meaning the platform you lend to could go bust or have issues, and you might not get your Bitcoin back, so there's risk there. And finally, you could invest in companies related to Bitcoin, like mining companies or wallet manufacturers. But that's investing in a company stock, with its own set of risks and rewards separate from owning Bitcoin itself.
Okay, good to know those exist for later exploration, maybe.
Right.
But for starting out, the core three HODL, BCA, ETFs seem like the way to go. Let's zoom out again. What's the general feeling about the market outlook right now? What are the predictions saying?
Generally the forecasts for 2025 seem pretty positive, leaning bullish. We saw Van Eck suggesting a potential peak price around $180,000 by the end of this year. CoinCodex was projecting a really strong ROI, like over 80% by August. A lot of this optimism seems tied to money continuing to flow into those spot Bitcoin ETFs we talk about, and maybe some growing regulatory clarity in key regions.
Okay, 180K. That sounds pretty optimistic compared to 103K is now. But we have to temper that, right? Bitcoin's history isn't exactly a smooth upward curve.
Not at all.
Yeah.
And that's the crucial caveat. That Morningstar piece was very clear. Past performance is no guarantee, and Bitcoin has historically had very sharp corrections, big price drops. It absolutely underscores why managing risk and having that long-term perspective is so vital, especially if you're coming in now at these higher price levels. Volatility is part of the deal.
Right. Don't expect a straight line up. Be prepared for bumps. Okay, before we wrap up, any final, absolutely essential points for beginners, the real foundational stuff they need before they even think about buying?
Yes, definitely. First, just take a little time to understand the basics of what Bitcoin is and how it works. Don't invest in something you don't understand at all. Resources like Coinbase's educational guides are a good starting point. They're usually pretty clear. Second, I have to say it again, security. It is paramount. Choose your exchange or wallet carefully. Understand how to protect your private keys if you're holding Bitcoin directly. Treat it seriously. And third, just be aware of the practicalities. There can be tax implications when you buy, sell, or earn Bitcoin. Laws vary. If you're unsure, it's probably worth chatting with a qualified financial advisor or tax professional in your area.
Solid advice. Understand it, secure it, be aware of the rules. Okay, so let's quickly recap this deep dive for anyone feeling like a Bitcoin latecomer. Key strategies we discussed. Dollar cost averaging to ease in, looking at spot Bitcoin ETFs for accessibility, committing to a long-term HODL mindset, and underpinning it all with careful risk management and staying informed.
That really hits the main points. And yeah, while the price might seem high today compared to the past, the underlying potential, the role Bitcoin might play in the future, that story still feels like it's unfolding. The opportunity might look different, but it doesn't mean it's gone.
Definitely. And that leads us to a final thought to leave you with. Looking beyond today's price or even next year's predictions, what fundamental shift do you think could happen? A shift in global finance, maybe in technology, that could massively accelerate Bitcoin's adoption and value, or conversely, pose a serious challenge to it, something to chew on as you weigh your own decisions. Thanks for joining us for this deep dive.